As of right now, the US dollar is the world's strongest currency, as central banks all around the world hold a majority of their foreign exchange reserves in the dollar, and the dollar vastly dominates the share of international transactions. But all this may soon come to an end. That's because recently, China and Brazil had just struck a deal to ditch the US dollar. Prior to that, Saudi Arabia is considering accepting yuan as an alternative to the dollar. And even right here in Asia, Asian countries are now considering dropping the US dollar. Basically, all the countries be like, "Aiya, US dollar don't want to touch you This is probably one of the most important events that's happening right now. Bigger than the Fed raising rates, bigger than my stock crashing 20%, and definitely much bigger than your uncracked half-boiled egg. So I wanted to make this video to share what's going on. Why is everyone trying to ditch the US dollar? What will happen to the dollar? And more importantly, what you can do to protect yourself against this. Alright, let's jump right in. Before we can talk about why this is all happening, it's important to talk about how the US dollar got to where it is in the first place. By the way, the term for this is called reserve currency. A reserve currency is when central banks and financial institutions hold a large amount of that currency in their reserves. And the dollar was chosen to be the reserve currency because it is currently the safest, most stable, and most resilient currency. It's kind of like when you get number 1 in sports, all of a sudden, all the brands out there want to pick your photo and name on their products. So how did the US dollar become the world reserve currency? It all happened during World War II, when the US emerged as the world's largest economy and dominant military power. Shortly after that, in 1944, the US held a meeting with 44 nations around the world, and there they created something called the Bretton Woods Agreement. In this agreement, the Allies agreed to peg their currency to the US dollar, and the US pegged their currency to gold. But why would everyone agree to do something like that? That's because countries trade with one another, and they needed a currency that was stable and widely accepted to conduct those transactions. Otherwise, they might run into a risk where they could end up with a currency that's difficult to exchange, or a currency that can go up and down like 10 or 20% a day, like Bitcoin. All this worked quite well for a while, until 1971, when the US ran out of money. And it's gone. That's when President Richard Nixon announced that they would no longer peg the US dollar to gold, effectively ending the Bretton Woods Agreement. That allowed the US government to do what it does best: print more money. As a result, that led to devaluation of the currency, inflation, and financial instability. Other countries be like, "Siao eh." But then, why did they not go back to using their own currency? The answer is, they couldn't. That's because back in 1945, President Franklin Roosevelt held a secret meeting with the King of Saudi Arabia. During the meeting, the US agreed to provide military protection and economic assistance to the Saudi Arabia. And in return, they will give US the access to their oil. This eventually gave birth to the petrodollar, where Saudi Arabia and other major oil-producing countries agreed to price and sell oil exclusively in the US dollar. So if any countries wanted to buy oil, they will first need to convert their money into US dollars, then US dollars into oil. This created a constant demand for US dollars, which helped to support the value of the currency and maintain its status as the world primary reserve currency. This gave tremendous power to the US. Because of this, the US was able to weaponize the dollar by imposing sanctions on countries that didn't comply with US objectives. For example, they sanctioned Iran to pressure them to abandon their nuclear program. They sanctioned Venezuela due to its violation of human rights. And most recently, they prevented Russia from accessing their war chest money. And even though Elon Musk likes to tweet nonsense on Twitter, this time he got it right. The US policy has been too heavy-handed, making countries want to ditch the dollar. Combined with excess government spending, that forces other countries to absorb a significant part of US inflation. Countries soon realized that the dollar had too much power on them, and they wanted to break free from it. And so, the dominoes began to fall. 2014, Russia signed a $400 billion deal with China to bypass the US dollar. Turkey and Iran began using their own currencies to trade. India and China did the same thing. Russia started decreasing its holdings of US Treasury securities. The EU set up a special purpose vehicle to bypass the US sanctions on Iran. The UAE and China agreed to trade in their own currencies rather than US dollars. China signed a deal with Iran to bypass the dollar. And the list just goes on and on. Quick pause. Here are 4 reasons to sign up to Moomoo Singapore. 1. You can easily keep track of companies' news and announcements within the app. 2. Moomoo lets you easily analyze the company from both the technicals and fundamentals to help you make better decisions when investing in the company. 3. They have an active community where you can discuss stocks and investments with one another. And last but not least, they have further upgraded their latest promotion. For the first reward, when you deposit $100, you will get a $2 cashback daily for 10 days. Then, for the second reward, deposit $2K and perform 2 buy trades to get a free Coca-Cola stock worth around $80. And the ultimate reward, deposit $10,000 and perform 7 buy trades to get a $108 cash coupon. So, if you want to earn these rewards, you can sign up to Moomoo Singapore using my link down below. With that being said, let's get back to the video. But then, what will happen if the US dollar one day loses its reserve currency status? Bwah! Just kidding, the world won't explode. Or maybe it will. Who knows? But there are 2 things that will happen. 1. Higher inflation. Many of the stuff that US currently consumes are imported from elsewhere, like petroleum, vehicles, medicine, and food. When the dollar is stronger than other currencies, the cost of importing goods becomes cheaper, and that keeps inflation low. But when other countries stop using the dollar, the value of the dollar would drop, and that would cause the cost of imports to go up, and the cost of borrowing would also go up as well, as investors now demand a higher interest rate to compensate for the higher risk. And all this will lead to a higher inflation in the US. Second, there would be a shift in global economic power. As mentioned earlier, the main reason US has so much power right now is because many countries are using the dollar. This gives the US the leverage to control other countries through its sanctions. But if everyone stops using the dollar and opts to use other currencies instead, like the Chinese yuan or the euro, then US would lose its power. The countries be like, you sanction me? No, I sanction me. But as scary as it seems, this is actually not something new. Reserve currencies come and go all the time. On average, the lifespan of a reserve currency is 94 years. And right now, the US dollar has already lasted for more than 100 years, way past its expiration date. As pointed out by Ray Dalio, this is something called changing world order, where a leading nation would be replaced by a rising nation. Before the US, Great Britain held the status of world reserve currency for 105 years. Prior to that, it was France which replaced the Netherlands, which replaced Spain, which replaced Portugal. All of them be like, lose reserve currency status? First time? There could be a variety of reasons why this happens, like changes in economic power, technological advances, and shifts in political power. But in most cases, it happens whenever there's crisis and great turmoil. For example, the US overtook Great Britain as the leading nation after World War I. Prior to that, Great Britain defeated France in 1815. So then, how likely is the US dollar to lose its reserve currency status, given that more and more countries are ditching the dollar now? If you ask the crypto bros, they will show you that the dollar has lost over 90% of its value since 100 years ago. And they will ask you to buy Bitcoin, because Bitcoin can only go to the moon. If you ask gold investors, they will show you that gold has kept up with inflation throughout time. And again, they will ask you to buy gold. And if you ask Tesla investors, okay, never mind. But realistically speaking, the US dollar is still safe for now. As of now, there's no other currency that can even come close to replacing the dollar. For example, even though China is trying to break free from the dollar, whether it's by buying tons of Russian oil in yuan, asking Asian countries to drop the dollar, or expanding the BRICS alliance as an alternative to Western economies, it's extremely hard for countries to start adopting the Chinese yuan due to reasons like tight capital control, lack of transparency, and political tensions with other countries. But probably, the closest currency to replace the dollar is euro, as it's the second most held currency right after the US dollar. But again, there are many factors that make it hard for it to achieve that, such as political instability, lack of strong euro bond market, and lack of depth and liquidity in euro-denominated financial markets. So for now, the US dollar is still safe. Though slowly but surely, there will be a time where the US dollar one day loses its reserve currency status. But before that can happen, many things will need to happen first, like some big war or even some black swan events that we won't be able to foresee. So for now, there's nothing to be worried about yet. But as to what you can do about this, the best course of action is to put your money somewhere that can give you a higher return over the long term. Some people will suggest the VWRA ETF to diversify across developed markets. Some will suggest investing in growth stocks. Others will suggest investing in Singapore dividend stocks. Personally, I think all these are good choices, as long as you don't go all in into crypto. That one a bit But as always, as long as you stick to your investment plan, buy good companies, consistently dollar cost average over the long term, eventually you will whack big. Anyway, that's all for this video. Hopefully you find it useful. But do join my Telegram group to discuss anything related to stocks, credit cards, and personal finance. Like, share, and subscribe, as I'll be posting new videos every Monday, Wednesday, and Friday.